right, good morning. Comment allez-vous? Alrighty. Welcome to Forex.Today, the YouTube community of almost 19,000 foreign exchange traders stationed around the world. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans for this beautiful New York trading session. So thank you for subscribing. Thank you for clicking the like button. Let's get on with it. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma! Look at that, my computer. I had to reboot it because the Wi-Fi wouldn't connect, and then I rebooted it just now, and the mouse wouldn't work, the keyboard wouldn't work, the start bar wouldn't work. So anyways, oh no is what I'm thinking, huh? Oh no. But anyways, hello. Thank you for being here. My name is Wayne McDonald. I'm a currency trader just like you, Bubba. But I've been doing this 20 years now, which is really nice. Before that, I was a venture capitalist. I read thousands and thousands of business plans and patents. Every day I'd read many patents. And guess what? This is by far the best business model I've ever seen. Money is our product. Money is our service. This is the purest form of business there is. It's the second oldest profession in the world. Don't ask me what the first one is. But hey, money. Everybody likes money. Okay? So that's what we do. Money is what we do. We is money. So very cool. So what are we trying to, we're trying to buy low or sell high. I think that's pretty much it. That's the universal truth. Okay. Understanding whether you're a buyer or a seller is going to be fundamental analysis. Okay. And when and at what price would be technical analysis. So great. So I'll cover all those things. Make sure you ask questions, get involved in the chat, but treat each other with dignity and respect. Otherwise you will get the boot, boy. I mean, you're in our office, right? This is a professional live stream. So anyways, conduct yourself professionally. If you ask questions, I will do my best to address them. I highly recommend you take notes because there's more than 5,000 live streams associated with my work on the Trader's Way YouTube channel, on the Forex.Today YouTube channel, on the FX Bootcamp YouTube channel, thousands and thousands and thousands. And I think the shortest videos out there are an hour long. So very cool. So there's so much content. How do you organize all of this? Well, if I cover something today you think is helpful, in the notes, in the comments section, after I'm done the live stream and there's a recording, in the comments section, just leave a note. Hey, I like how you did the relative strength exercise. So 4 years from now, you can go into the back office of YouTube, right? Search your comments. Just go to the comments, the comments section, and you just type in relative strength. And all of a sudden you'll find the videos that you found helpful covering that topic. And now you can customize and tailor make your Forex.Today experience. Or you just watch and go, and move on to the next thing. Your choice. It's up to you, man. I'd like to thank you for being part of our community as a trader. I'd like to thank Trader's Way for being part of our community as a broker. There is a symbiotic relationship here. For you to succeed, you need to have a good wise decisions as of buying and selling. Well, that's where I come in. I want to teach you these things. The second thing is you need fast execution speed. You need reasonable costs. Right, associated with the work that you do. You need to be paid your swaps because that's income, not just asset appreciation, but income. And then, of course, if you ever need it, access to world-class customer service. And all of a sudden, boom, check that out, tradersway.com. They need you because they're paying money to have licenses for various platforms. They need you because they're paying money to have liquidity partners, right? And then ultimately, all the staff and everybody else. I mean, this is a big, expensive overhead to provide you a good quality service. So to pay, I don't know. I don't know what the cost of acquisition to get a new client is. I don't know, $100, $500. It's expensive, right? But the thing is, if you come in, pop in $1,000, blow up your trading account, and 6 weeks later you're off doing something else, then look, it's not even an opportunity to break even. That's hardly anything. It's like, what was the point? So Traders Way is one of the only brokers that I know that says, hey, you know what? The better business model is attracting clients that actually can trade and stick around and be clients, not for 6 weeks or 6 years, 6 decades, because they're patient, disciplined, and profitable. And they're like, that's a better business model, right? So I'm like, oh my God, that makes so much sense. So anyways, if you like having common sense being part of your Forex trading business, then I highly recommend Traders Way. So go tradersway.com, get that demo done, son. I use the variable. That's the VAR. You could use fixed spread if you're a scalper. If you want to pay hard dollars instead of soft dollars, go with the ECN, and then there's no spread. But anyway, tradersway.com. All right, so here we is. Okay, and not long ago, we had yen strength. We were way up here. We had dollar strength. And the game that I'm playing says, I want this to head down, and I want this to head down. So yesterday in Asia, I did 2 trades, and I lost on both. Okay, that's okay, man. It's okay, right? I lost 0.2%. So it's cool, dude. It's all right. I'll survive. Okay, but I made money today. Yay! So that's good. Good. So this is going in the right direction. Stevie had COVID, huh? Welcome back to the world, Stevie. Right? I'm gonna cover. Hey, welcome back. We're so happy to have you back here, Steve. Everyone's got their mask on. Hey, look, I got a mask right here. No way. So welcome back, man. Glad you're healthy and alive. All right, so that's all good. And so last Thursday, by the way, today's Thursday, which means swing trading day. So I'll see you guys later for those that are in my swing trading group. And of course, if you're in my swing trading group, you might be in my day trading group. Either way, I'll see everybody at 3 p.m. But last week, the only 2 pairs we wanted to trade was Aussie and CAD. Pound was too far down. It dropped too far too fast for me to be interested at that time. So what we were saying is we wanted yen to be down, dollar to be down, Aussie to be up, and CAD to be up. And the cool thing is that Aussie's generally been up most of the time. Canada, fits and spurts, but was generally up. And so when this was happening, we were making money. Then this happened and then got knocked out. And now this happened and we're on re-entry. And I think I have a couple of trades on this one that survived the big pullback of Wednesday. Survived that, so those might now be position trades. So you have to understand, even if you strategically have swing trades planned, you still tactically day trade or even scalp your way into it. Then if you survive the first major pullback, then they become position trades. So there might be some trades I'm in for now months, not just days. Cool, right on. Maybe, I don't know. Depends on what the market does, right? So anyways, let's go through this. Before we get going, let's start with gold, oil, and Bitcoin. Gold, oil, and Bitcoin. Bitcoin. Okay, my oh my, WTI has come all the way back. Okay, I'll measure this out this way if you want. Now, rumor has it, okay, that the price of 80 was a psychological barrier. Rumor has it. Yeah, for sure, eh? The other thing, I don't know where I got this one. Where did I get this one? I don't know. I don't remember. Anyways, rumor has it that the SPR is going to be tapped. Did anyone hear about this? That they're going to release from the SPR, the Strategic Petroleum Reserve. This is the U.S. government's stash of oil. Now, some of it is for the military, which they never release. But the SPR has to do with OPEC. See, OPEC came along. They were being raped and pillaged by the Western world for cheap oil, to the point where they're like, hey, man, you need to stop this. You need to, offer us fair prices, treat us with respect. And of course, the Western world said, screw you, we're not interested in treating you with respect and paying you fair price, right? Screw that. We want cheap oil. We don't care about you. So anyway, so they all got together, or not all, but many oil producing countries got together and created a group and said, well, if you buy from one, you buy from all. And therefore, if you don't pay us a fair price, nobody's going to sell you anything. So that's what OPEC's about, right? Okay, cool. So then OPEC is developed, and then the Western world created the International Energy Association. How does that work? Well, these are petroleum exporting countries. This is basically petroleum importing countries. And they're like, oh yeah, you're going to do a club? Well, we're going to do a club. So we created the EIA, which says, all right, basically OECD countries, if OPEC uses oil supply as a weapon, we need to counteract that by having reserve supplies, strategic petroleum reserves. So the USA keeps oil on hand because they're a member of the EIA, and Canada, and they're OECD. So there's many countries, and they all keep this strategic petroleum reserve. It's just oil on the side. So if OPEC says no more oil, at least they'll have maybe a few weeks worth of oil in supply to counteract that threat. But every once in a while, a country like the United States might want to just take this stuff that they're having to the side for the IEA. They can just release it into the market and bring down oil prices. If OPEC's not going to bring down oil prices, then that's one way. And so anyways, rumor has it, and I can't recall my source, I apologize, but that we're going to tap into the SPR. Ex-trader said, didn't the fracking revolution change the dynamic for the United States? Yes. The USA went from an importer to an exporter. Correct. Yeah. Yep. Victor says it's about a month. Yeah, that sounds about right. E-Wild says, hey, does the market care about weekly unemployment claims? Well, yeah, we do. But look, they come out every week. We know what the trend is. So if it's way off trend, that would be really newsworthy. And it's going to come out about trend. We already kind of know. And the trend is what matters. If it's suddenly a change in trend, one way or the other, that would be newsworthy. But we got non-farm payrolls tomorrow. We have a trend in that. We have the weekly jobless claims, right? Which is, again, you can look back and say, well, what is the rate of change over the last 10 weeks? What is the average for the last 5 weeks? And you can start breaking it down into bite-sized pieces. But the thing is, we know exactly what's happening. And more importantly, that stuff only matters in regards to a policy at the Fed. But we already know the new policy, so really I could go back ex-trader and say no one gives a damn about the, sorry, it wasn't ex-trader, who said, E-Wild. No one really cares because we already know. We know what the Fed policy is, so the only way sort of weekly jobless claims truly matters is when it counters the stated policy. So the Fed said they'll probably start tapering in November, but if weekly jobless claims come out horrible, then maybe people will say, oh my God, well, they're not going to taper if it's going to be that bad. But again, what is ADP? ADP is the job report for small and medium-sized businesses. Was ADP horrible? No. What are the trends in weekly jobless claims? Are they horrible? No. What about non-farm payrolls? What about the employment subcomponent to ISM services? This is all information. So ultimately, all this information tells us about the Fed, and most likely the Fed is going to do exactly what they told us, and that's what changes the value of the currency, what the Fed is doing. So you could argue, no, it doesn't matter that much, but it doesn't. It's just it already mattered. Okay? Cool. Was it? But where? I don't remember where I heard it though, Pete. But thanks. What did you Google it? Thanks. Yeah, I don't remember my source. I like to give you my sources. It's just something I know, but I can't prove. All right, cool. Because the government calls me from time to time and asks for my advice, and I'm like, why don't you just tap the SPR, bro? And they're like, that's a good idea. Of course, it's a good idea. So anyways, all right, so that's what's going on. Nothing's right, I'm told. Okay, great. How about gold? Gold still not falling, which is good because the plan that we've had now since October 1st was, okay, higher high, which predicts higher low, which predicts new higher high. So your buy zone is El Perfecto, okay, 1750, and you have not been rewarded. If you bought it, great. Okay, look at the role reversal. It's an easy buy. The thing is you haven't been rewarded yet. So maybe this is because of non-farm payrolls and all that kind of stuff. Also, I think the challenge with gold, even if you want to buy it because you believe inflation is going up. Now, all this scare about inflation, we're only going to go back to maybe neutral. I mean, we're like 10 years away from interest rates going back to where they were when I first became a currency trader, right? I remember I made something like $10,000 a month on interest that I had on my PayPal account. It wasn't 10. It might have been 7 though. Like I remember looking at it, I'm like, oh my God, that's actually pretty good money. We're a million miles away from those days, man, right? A million miles away from those days. Even if inflation's high, it will normalize, and you have to look at the real rate, and you have to look at the growth rate and all that kind of stuff. And in 5 years from now, we might have 3% interest rates, maybe. But that's so ridiculously low that I don't think you need to worry about it, right? Right? So anyways, would that kind of out of control inflation lead you to need to buy gold? I don't know. I don't know if it fits that role. And right now, you have countries like India that have an appreciating currency, but they don't want an appreciating currency. So, I don't know. You have to plan that out into your buying. So when do they buy and when do central banks buy and when do they sell? So if India had their balance sheet, okay, so you got assets and you got liabilities, And on the asset side, they have cash and they have gold. Okay? And a country like India might raise interest rates, Mexico might raise interest rates, South Africa might raise interest rates, so on and so forth. I'm just picking on random countries here. And so let's say if India raised interest rates, okay, that might attract capital because you'll earn a higher interest rate there than in other places, so people might buy. But then that drives up the value of the rupee, and now products that India exports now get more expensive for foreigners to buy, and a foreigner might just buy the same similar stuff from China. And China is manipulating their currency to get it cheap, and if India raises interest rates, that would increase the value of the rupee, and all of a sudden they're less competitive versus China. And people are like, oh, well, I can get it for a penny cheaper from China, so I'll go there. And now the Indians are screwed, right? So how does the central bank handle that? Well, let's think about it. If they buy gold, okay, so if they buy gold, $1 billion worth of gold, we'll put it in dollar terms, then cash goes down by 1 billion. Where did the cash go? Into the interbanking system, the global interbanking system. So, right? So the cash is here. So there's, oops, this should be a negative. Okay? So India has 1 billion less in cash, but what did they do? They went into the market, bought gold. Okay, so the gold went here, and now there's an increase of gold of $1 billion. The balance sheet is still balanced. They have less cash, they have more gold. So everything works out. Nothing actually changed. The same amount of assets, same amount of liabilities. Of course, these must balance, right? So anyway, so there we go. So that's balanced. So what's happened? Well, India drove up the value of gold because they came in and bought another $1 billion worth of it. But now there's more rupees globally in the interbanking supply. And therefore, the value of the rupee went back down, counteracting their raise in interest rates. Yet, their balance sheet's still balanced. Smart, right? Right? Nice, right? Matrix says 16% return over the last 10 years on gold. Yeah, but they're not looking at it as they're not looking at it the same way you're looking at it. So there's different reasons for it. Anyways, so in this case, it was a tool of central banking. They don't really care about the asset appreciation. What they're trying to do is depreciate their currency while maintaining a balanced balance sheet. Okay? So in that case, your play would be if India and other central banks need to raise interest rates and they're worried about currency appreciation, you might want to buy gold. Okay? Right? And therefore, they don't really care because it's basically hedged, right? All right, so anyways, that might be part of your long-term play. Imagine you're sitting down talking to a wealthy person who's interested in having you buy gold, and they're like, oh, what's your pitch? And you sit down there and you explain macroeconomics and various central banks that have been and you expect to continue to buy precious metals. And you could say, well, look at the Central Bank of India has more gold in their vault than they ever have in the history of the country, and Israel's doing the same. And there's probably many other exporting countries that are doing that to maintain a balance sheet, but at the same time depreciate a currency and raise interest rates. It's complicated, but at least you understand it, and therefore you can make money from it. Right? And then they'll say, damn, you're beautiful when you get excited like that. You get a sparkle in your eyes, son. So anyways, boom. Bitty, bitty, bitty. Went from 40 to 50 to 55. Interesting. Cool. There's the dip. Looks like 53. Oh, is that right? Poland is trying to buy gold and devalue the zloty. That's pretty cool. That's cool. Let's just bringing this up. I thought it would give me a better chart. Okay, let's say over the last year. Okay, Polish zloty depreciated, appreciated, and depreciated again. And you might want to say, you might want to look and say, when did they start buying gold? January 1st? When did they stop? Right? April. And when did they start again? June. Now, the interesting thing is, for those that trade with me, you could look at this and you can, this is a pattern that we traded all year, not on zloty, but on everything else, which is kind of interesting. Thomas wants to look at euro dollar. Well, let's go back to here. Okay, euro is weak and the dollar is weakening. Why would you want to look at that, Thomas? You should look at like euro pound. You should look at euro Aussie. You should look at euro CAD, even euro Swiss franc. But euro dollar, that's one of the worst things to look at. It makes no sense. So hopefully since you asked, I'm not trying to shame you, but I'm trying to make a point. Okay, during this period here, you shouldn't want to look at it. Why would you want to look at that? Okay. Brandon says, what indicator is that? The index stuff. They're indices. Okay. If you look at the description below the live stream right now, there's a link to get all this stuff. Okay. So look in the description below. You can get all these chart templates and indicators and everything. Cool. All right. So let's take a look. How are we doing here? So far, so good. We got our down. Then we should be getting an up soon, and then maybe a new down. Thank you, peso. Okay. Thank you, peso. That's nice. Take a look at USD South African Rand. Oh my God, it was perfect. Perfect. Look at that. Perfect. Perfect. Oh my God, Becky. Huh? Look at that. Okay. Holy smokes, eh? Look, I have it all listed out here. Nice. Cool, man. There you go, South Africa. I'm doing my part. Doing my part. I'm selling the South African dream. Raymond, I love my country. Raymond, if you made $5 million a year, would you still live in South Africa? It might be a great place to be rich. There's Eurozar doing the same dang thing. Yeah, it might be. I mean, look, if it's funny, like, let's say you make $5 million a year. You can't even live in New York City, right? You're like, oh, right? So, like, if you made $100,000 a year, okay, how expensive is your house? Let me think about this. So 30% goes to taxes, or 40%, so you're down to 60. So you could afford, gee whiz. So I can't even do the math. It's so simple, but it's so low. So how much can you afford for a house on that? Raymond's going to go to Costa Rica. So much better. Dream big, boy, dream big. Yeah, Costa Rica, I guess, is nice. So, boy, so you're doing like, I'm trying to think. So you got 5K. What would you have for a mortgage? What do people have? Like a 20% for a mortgage? So that's maybe $1,000. I don't know. I guess your mortgage is $1,000 a month. So what is that? A $200,000 house? I guess, right? You can't live in New York City. You can't live in New York City. I mean, you're not even close. Right? So if you make $200,000 a year and you can afford $2,000, that's like a studio apartment that you're renting. Right? A studio apartment. You're like a college kid. So you're like, well, shizer. So you make $500,000 a year. And now what? Okay, maybe you own a 650 square foot, 1-bedroom apartment, right? Like, when do you get to be a baller? When can you even afford a parking space, right? So you're like, damn, boy, I got to make $1 million a year to live a mediocre life if you're going to live in New York City, right? But many places, $1 million is a hell of a good salary. Now, Brinsley's interesting, right? In South Africa, you would pay cash for a house and have lots of money left over to live comfortably. That's why it's a third world country. Why would you pay cash for a house when you can borrow money for cheap? So, like, think of it. Like, even basics. Let's say a mortgage is 5% a month, let's say. In a normal world, 5%, 5% a year, I should say. 5% a year. And the stock market on average goes up 10% a year, let's say. Well, then why would you put money down on, right? Like, you could so you put 20% down to buy a house. You have 80% leveraged at 5%. You take all that other cash, you put it in the stock market, and it pays for your mortgage for free. Right? Mark's $3,500 a month to rent here. Yeah, where are you located? Raymond says he needs space and nature. Well, Costa Rica is mountainous. I don't know, right? Why pay interest on the loan? I just explained it. Because you're making twice as much money somewhere else. So let's say you make let's say you have 100,000 in the stock market. It goes up, right, $10,000 a year, and the interest on your house is $5,000 a year. So you take money out of that, and now you have a free mortgage, and you have 105,000 in the stock market, and then another 10 years goes by, right? Because you get your house for free. During the financial crisis, I explained how you could get like pickup trucks and stuff for free if using smart monetary tactics, smart finance. Right? So like I gave an example where you can get a 0% loan from Ford. This was back in the day, right? You could get a car loan from Ford. You can go to Ford and get a Ford F-150 or a Mustang. Usually you can't get a Mustang. They mark that up. But you get your Ford F-150 pickup truck. They'll lend you the $50,000 for free. Now, if you have $50,000, you put it in the stock market. So you borrow the money, but you have the money. So they get, right? So that's good. They're not charging you interest. So now you take your $50,000, which you already had. I'm not saying take the loan because no, they give you the vehicle. Now you have to make monthly payments, but they're not charging you. Well, you had the 50 grand because you're a baller. And you're like, I'm going to take my 50 grand, put it in the S&P 500, and it's going up 20% because this is occurring during a financial crisis. So the Fed comes in and then gives free money to the stock market. The stock market rallies 20%. So you've made $10,000. With the $50,000 that you had, instead of giving it to Ford, you took the loan, $10,000. Well, how much are your loan payments every month on a Ford F-150? How much is it? $500 a month? I couldn't tell you. So $6,000 a year? But you made $10,000. So your Ford is free because you're smart. Because you're smart with money, your truck, your brand new Ford F-150 is free. Now, the cool thing is 5 years later, it's all paid off, right? But your truck is still valuable. You could sell your truck, and trucks, the resale value is huge. So a 5-year-old Ford that was 50 grand, I'm sure you can get 20 grand for it. So like you just made money. Ford gave you 20 grand. They said, thank you for buying our truck. And I'm serious, they are. They gave it to you interest free. They're like, thank you for buying the truck. Now, a poor person would say, I'm going to get the truck because it's interest free. And I'm going to take money out of my paycheck and I'm going to pay the $500 a month to have this truck. Okay, that'll never work. Okay, you're taking money and you're losing money and you're throwing it into a depreciating asset. That's terrible. But if you're smart, you have some cash, you put it in the stock market, you're making money, you're getting the truck for free, and then 5 years later you sell it and you get 20 grand back, plus you got the truck the whole time, and boom, you put that back in the stock market, and you're just, everything is free. Your money keeps making more money, keeps making more money, because you is smart. Now, Salado Club says, what if the stock market falls next year and you're stuck paying it back because then you don't know what you're doing? See, I don't even think that way. I study the markets. I see monetary policy. So in a time like that, when the Fed is starting quantitative easing and they're pumping in hundreds of billions of dollars a month, like what the hell are you talking about? What if the stock market comes down? The stock market would never come down in a situation like that, right? It's just like it's impossible. That's not how it works. Quantitative easing pushes up asset prices. It's not a consequence of quantitative easing. It's what quantitative easing does. It's the whole point. So, dude, if you're an economist and a financier and a trader, you know what all this means. You're like, give me that free truck. I want the free truck, and I'm putting money in the market, and everything gets taken care of. Okay? They drive down interest rates to the point of free, and they drive up asset prices. Cool. Okay? Unless there's a black, okay, yeah, but, okay, then sell the truck or something, okay? Be careful of your level of leverage then. If I put $50,000 into the stock market and take a $50,000 loan, I have $50,000 in assets and $50,000 in liabilities, plus I own the truck, but whatever. Look, my balance sheet is still balanced. It's the other way around when you're like, the stock market's down and everything's bad and people are losing their jobs. And then Ford comes out and says, would you please buy a Ford F-150 from us? We will lend you the money for free. Just come get it. And you're like, well, I don't have much cash and times are bad, but I need a new vehicle. So I got no money, but Ford will give me the money for free. So then you take on a truck and all you have is a liability. and a depreciating asset. Well, that's different. That's not what I'm talking about. Okay? You have to have a balanced balance sheet. Okay? And so that's where Forex comes in. So you're like, well, how do you get the $50,000 in cash? You earn it slowly. Okay? And you'll see once you got money, things change. All of a sudden, you don't waste money on things like cars. Okay? Okay? Cool. Rookie says quantitative easing has drawbacks too. Well, I didn't say it was perfect, but I know the consequence. The short run consequence is driving up prices because that's what it's designed to do. That is the whole entire point. So you buy real estate, you buy the stock market, which is smart anyways because you need to own assets. Those are assets, okay, many of which provide both income and asset appreciation. It's what it does. It's why the rich get richer. Why do the rich get richer? They have money and they have assets. Now, when times are good, they don't have any money. Why? They invested it all into assets. And then when times are bad, they sell some of the assets. Now they have cash. And then asset prices plummet because everybody's selling. And then they buy a deal with the profits they got from the last time they did this. Okay? And the Fed will bail them out if things go worse. It's great, man. It's good. You should get rich and try it. I think you will like it, guys. Right? I think you will like being rich, but you have to be smart with money. Okay? So anyway, somebody asked about euro dollar. I'm not even interested. I haven't even looked at this in days. I'm like, nah, not interested. I had a trade on, look at this. Here's what I did last night in Asia. I threw a limit order here. And I missed it. I missed it by 2 shakes of a lamb's tail. I missed it. It's crazy. I'm like, where's my USD CAD? I was already counting the money. I'm like, I'm going to get me a Ford F-150. And then I'm looking at the account and I'm like, what the fudge? What the fudge? Where's my, and then my limit order is still just sitting right above that wick. And I'm like, you son of a gun. So anyways, this one working okay. It's not great, but that, to me, it was I mean, what we were talking about in the day trading group in Asia yesterday was, how to get yourself into a mediocre trade when you believe the upside potential is worth it. Very complicated discussion. You're like, well, how can a mediocre trade be worth the extra risk? Well, I'm like, well, that's what makes it a higher level conversation. Because if you're quite binary, if you're very mechanical in your trading, like you can't ever do something because this is the rule, then you just won't have an opportunity. What I was saying is you wouldn't have an opportunity last night or today, depending on where in the world you are. And then with non-farm payrolls, you probably won't have one. And then Monday's complicated because it's a holiday in some places and some banks are closed, but markets are open. So it's weird. So anyway, so that might be a lame opportunity. And all of a sudden now days are going by and you may not have an opportunity if you're purely mechanical in your trading decisions, which means you're not really making decisions. You're waiting for exact things to click in order before you can move. So it's not a decision. You're waiting for the sign. Sometimes, so what we were talking about is thinking forward. You might want to push yourself to be more aggressive, but you do it because this turn, this change here is key. It might be key. It could be the turning point. This could fall for 10 weeks, for example. And so if you waste the next 3 or 4 trading days because you have mediocre conditions, it kind of will just slowly fall without you, and all of a sudden you're 200 pips behind because you never got triggered mechanically. So anyways, so we were talking about how to do this. And that one, dude, I think the price hit it, but I missed it by even just the spread. Like I missed it by a pip, man, that entry. Which is not a big deal. So we're at 26, so we're down here. I mean, I'd only be up 25 pips, but to me, it's not 25 pips, it's 400 pips. 400 plus, 500. It could be 1,000 pips I just missed out on. So now Daddy's got to go to work again on that, and I don't know if I'll get another opportunity. So once again, if I want to try, it's going to be a mediocre entry that I'm forcing myself to take. But again, I'm not looking for perfection. I'm looking to get in trades. Okay? Think of it. I'm not looking for perfection. What am I looking for? I have made analysis that says this pair, for example, Aussie dollar, in the third week of September, and then again on October 1st, will go up for 12 weeks. So I'm not looking for perfection. I'm looking to get in. Perfection? What perfection? Who asked you for perfection? Oh, this never came back and touched this price, so I had to ignore it. What? What are you talking about? Are you a bull or not? Okay. Well, it didn't dip enough. It only dipped 30, right? 38.1%, so I had to ignore it. Dude, come on, bro, get in. Are you a buyer? What do? You buy dips? You buy higher lows? Then you're always asking yourself, I want to buy now. Sometimes it comes down, cry me a river. And then it goes up, and then sometimes it comes down even further. Yeah, this knocked me out of a trade. Cry me a river, right? But the thing is, are you on this one? 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 Okay. And what if they never quite come back and hit your pivot? Or what if they never quite back and hit your fib? What if they never quite come back and hit your psych level? What if you never get perfection? Are you okay watching this go up and you're a bull and you're not in anything because it didn't give you a textbook? Darko says maybe adjust the pivot. Then don't use the pivot. See, I don't think mechanically. So when we're at a higher high, I'm going to buy a higher low. You guys know it, especially the guys in the day trading group. It's what we talk about over and over and over and over and over again, right? It's made a higher high. Good, I'm a bull. I'm going to buy a dip. There's a million different ways to buy this. So I'm going to look left and I'm going to drag this across. I'm going to look left. I'm going to drag this across. I'm going to look left and drag that across. I'm going to look low and drag this. And so I know there's a reason here to buy, 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 reason here to buy. So, dude, I don't care. Anywhere down there. As long as my stop's down below that, I don't really care. So you could buy it really high. You could wait for a smaller pullback. You could wait for a bigger pullback. You could work for the biggest roll reversal. But what I'm preaching in the day trading group is get in, right? But do I look for the stochastics? Like, dude, just buy it. What do you, right? So we spend a lot of time on that, which is the psychology of it. It's hard, man. This is a hard gig, but I'm like, dude, look, you just click, and look, I'm in, right? And you're like, but you didn't wait for the stochastic cross. Dude, are you going to buy it or not buy it? What's the decision? Right? So it's great to push. It's great to be meeting with people 3 times a day. You could really see growth, which is super fantastic. So anyways, Aussie's moving. I moved my stops up into here, so they're fine. Now that we have a higher high, I have permission to engage. I am worried about non-farm payrolls, but we'll see where we are at the close, right? Okay. head full of dreams. Kiwi, she's that mean girl. Kiwi is one like a girlfriend that betrayed you, and then she convinced you to take her back, and you do, and then you find out she's texting your best friend. You're like, you biatch. Yeah, she betraying you a second time. You're like, but I just took you back. Anyways. And so, yeah, I see what's going on here, and I'm not really interested in the moment. This might be a next week trade. Okay. Raymond's story of his life. Okay. Kiwi yen. We were just talking about how to trade at range, all that kind of stuff. Nothing added to that. Kitty cat. This is one I like. The standing plan is this, my friend. Roll reversal 21. Daily M2. Zoom in a little bit. Great. Okay, measure this up. This might be a tomorrow trade. Okay, I like CAD yen. I like it. Euro, don't want to look at it. Beast. Okay. So I caught the beast. What? This is part of the day trading group in Asia. We were here. And what did Wayne do? Give me the 51, brah. Okay. Fell 50 pips. Put the wankster in. Long and gone. Stop's already moved at break even. I cannot lose. Cannot lose. Okay? And I want to be a hero, baby. Reminds me of a Kid Rock. Start an escort service for all the right reasons. Set up shop atop of Four Seasons. Yeah. I want to be a cowboy, baby. One of the two songs that didn't suck. Kinda sucked. Only kinda. One of the two songs that only kinda sucked. Oh, Bob, got to be proud of him, though. He did all right for himself. Did you do pound dollar? Yeah, I think I did. Yeah, easy peasy lemon squeezy. Boom, kick it off. The psych level, 36er. Okay. Okay. Watch all of this. You can do this. You can do this. You can drag across. Pachow. That's great. You got it. Great. Bon. Bon. Easy peasy. All right. Peace on earth. May the pips be with you. May your profits be above average. If you're my day trading group, I'll see you at 3 o'clock for the American close. And then I'll see you at 8 o'clock for the Asia Open. Thank you for being my life, everybody. You're good people. I appreciate you. You make me want to get out of bed and be the best trader as I possibly can be. Cool. And thank you to Traders Way for being part of our community as well. Make sure you visit them and open up a demo account. Okay. These streams do not cost you money, but they do have a cost. That obligation of visiting tradersway.com. Smell you later, dude. Cheers.